It is Thursday, October 17th. It's Mellow Gary today because I've got a little bit of a back issue. I'm in a little bit of a mood. But you know what doesn't put me in a bad mood? Taiwan Semi blowing out earnings. Uber talking about buying Expedia. All the chip sector, buy the dip. SOXL was the play. Should be up quite a bit. We'll talk about the algorithm. We are going to, today is Alpha Pick Day. And so we're going to start out with Alpha Picks. Well, you know what we'll start out with? We're in a bull market. A resilient U.S. consumer drives September retail sales past consensus. We're in a bull market. You know, Gap is up 2%. Best Buy is up 1%. You're seeing American Eagle up 1%. You're seeing a lot of these retail names go up. You know, OKLO was up 41% yesterday. You know, the nuclear stuff. We'll talk about uranium. We'll talk about nuclear. We'll talk about everything. But today, we're in a bull market. Honest to God, it's just a bull market. Doesn't make sense that rates went lower and that mortgage rates went higher. We're seeing that. Something's broken. Is something going to break? Well, you're in a bull market until you're not. Look at the Qs. The Qs are up 1%, 1.12% in the pre-market. Okay, VOO, which tracks the S&P, that's up 0.52. I've said it before. I do think that tech makes a rebound. I said it yesterday on Spaces. I think I deleted my notes. But if you just go over here to Seeking Alpha and you go to market data, and this is how you use Seeking Alpha, go to the market data, okay? Look at the U.S. equity sectors. And we can see yesterday, utilities was up. Yesterday, financials was up. Yesterday, real estate was up. Where was the tech sector? Bottom 4. Okay, communication services and community staples. Then you go to 1 month. What's tops? Industrial, financials, technology, energy, and utilities. Okay, utilities is lagging behind at 3.8%. Industrials are up 6.1%. When you go to year to date, what's leading? Utilities, financials, communications, industrials. Technology's lagging behind. Go to 1 year. XLF, that's financial, utilities, industrials. Take a look. All of those little low, the low-hanging fruit, the low multiple stocks, they're leading over 1 year. Now go out to 3 years. And you've got energy, which is up 57%. So you're perfectly happy, even though you've had a pullback because energy is doing crap this year. But 3 years, if you just buy and hold, you're doing fine on energy, 57%. I would tell you to get the hell out of energy. Trade it. Don't hold it for 3 years. Trade it. Technology, you're up 47%. But when you go back to 1 year, it's in the top 4. This is how you build a portfolio that beats. Is you find a sector that's actually doing well and you stick with it. Now, 1 month, technology is 3%. When you just go year to date, technology is in the number 5 position. It's up 19%. Utilities is up 29%. You know, take a look at the 52-week range. When you look at the 52-week range, what's in the middle? The only one is energy. Then you got healthcare. Okay, everything else is up to the right. We're in a bull market. It's a little bit scary, but it doesn't mean it can't continue. That's how you find out that you're in a bull market. Okay, retail sales. A resilient U.S. consumer drives September retail sales. And if you want to know the winners and losers from September's retail report, here's an article that points it out to you. You can just go and look at all these stocks. Okay, but today, I want to start this off with, you guys gave me a big head in the Facebook group. I am thankful that I'm helping folks. Alpha Picks is killing it. And if you didn't know, Alpha Picks, it is the fourth pick down here, Alpha Picks, if you want to beat the S&P. Now, you can bundle up. Remember, you can get Seeking Alpha Premium and you can get Alpha Picks. You save $150. But if you just want this portfolio, you save $50 off of that. Okay, it's 145% gain. During the time when the S&P is up 51%. So again, the talk in the Facebook group was, one, they like Edward's options plays and they think I'm doing options. FYI, full disclosure, I'm still not doing options. Ed is trying to talk me into it. I really, really like his options plays. And when you're at all-time highs, buying those covered calls, it makes sense. What he's trying to do me to do, because it makes sense to buy and collect the premium. And then if you see a pullback, you just buy the stock because you were going to buy it anyway. But Alpha Picks, it's crazy how good this portfolio is. Now, I can't show you the portfolio. They've told me I can't. And people that it wouldn't be fair to the people that have actually subscribed to it. But let's go over just a couple of them, because the one they picked on the 15th of this month, it's already up 9%. 2 days, 9%. The one they picked on 10/1, okay? Because remember, you get a pick on the 1st and the 15th of each month. So the one they picked on 10/1, it's up 24.48%. The one they picked on 9/15, okay, the middle of September, they're up 11%. The one they picked on 9/1, they're up 14%. The one they picked on August 15th, they're up 27%. Of those 5 names I just mentioned, I have only mentioned one on the podcast as something I would be interested in. That's what's great about Alpha Picks. It's just this portfolio that I would never personally invest in. Now, they don't have all winners, and for me, they don't cut their losers fast enough, and that's just me. So they have losers. They have Okta. They picked Okta on February 15th. That's down 15% since then. They picked AMPH in July of 2023. They're down 13% on that. There are 8 stocks in their portfolio that are losers. 3 of them are currently strong buys in the quant. So 2 of them, they're at risk of getting cut because they're at hold. But that's the great part about this portfolio. They tell you when to sell. There are certain rules that they follow. And so I really like it. I really, really like it. One of the things is that they show you, and I can't go in there and I can't show you, but when you subscribe to it, they show you the percent of what they're holding in the portfolio. So just say you want you take 10K and you want to put 10K into this portfolio, okay? I'm not suggesting you take your whole portfolio and put it in here. I'm suggesting you take a certain portion of your portfolio and test it out. And because, $10,000, if you're up 145% over, 2 years, that's suddenly $225,000 at $10,000. That's what that is. So your top holding in a 10K portfolio, it would be $850 of MOD. Okay? Your second holding is $690 of POWL. POW. I've gone over both of those names before, but it just gives you an idea of how you can build that portfolio. And their picks are continuing to do very, very well. And again, that's why I like these tools. That's why I sell them on Linktree. That's why I'm a partner of theirs. You can bundle up. Again, bundle up, get Seeking Alpha Premium, which gives you the quant, which means you can do your own research on all the stocks, or you can get just individual, Seeking Alpha Premium and Alpha Picks, whichever one you want. But I wanted to go Alpha Picks because, again, in the Facebook group, they're talking about Alpha Picks are so strong and they're killing it. And I just wanted to share that because I think you hear it from me a lot. I don't think you hear it from the actual subscribers. So, Scott, thank you for posting that. Thank you for everybody who commented down below. I hope you're in that one. Now, the other tool that I sell is Trendspider. And you may not know this because I don't highlight this. But this is just an idea. With exactly 3 weeks until Election Day, Representative Jonathan Jackson just purchased General Dynamics, a major defense contractor. He sits on the House Committee on Foreign Affairs. Yes, this is a screenshot of what you see in Trendspider. Okay? You can see all of these political buys and sells. You don't have to subscribe to a separate service. You get Trendspider. It's in the tool. I don't use it. There are a lot of things in Trendspider that I don't use. I would urge you, use this link up here in Trendspider. If you've got another charting program, great. If you don't, use this link to get to Trendspider. You'll get to this page, okay? You can go through all of this stuff as to what they have. If it's not listed here, use the chat button in the bottom right and chat with them and see what they offer. Because this offer right now, for $53 a month, you get and what I do for you is once you sign up, you go back here to Linktree. My email's up here in the upper right. You just email me, and I'll email you the 4-hour algorithm. I'll email you 65-minute algorithm. I'll email you the watch list. I'll email everything to you. It's simple. It's super easy. But again, I don't go over a lot of things in the tool because a lot of people just want my 4-hour algorithm. I think there's a lot more to it. And I think everybody has their likes and dislikes as far as what they want in a tool. So if you get my stuff, I think it's great. If you don't, hey, just make sure you have a charting program. That's the key. Now, if you have Trendspider, they highlighted yesterday, less than 3 weeks until the election and uranium stocks are cooking. As AI demands more energy, nuclear power is stepping into the light as a reliable energy source. They highlight the names here. Look at all the green. Okay, here's the key. If you have Trendspider, I will include this link in the newsletter, or you can just go to Trendspider's Twitter page, and you can click on this. When you click on this, you import this watch list into your setup. You can scan against it. You can use the 4-hour algorithm on it. You can do whatever you want. But it has a watch list of all the uranium stocks. That's part of the benefit of creating a watch list in Trendspider. You can scan against that. So let's talk about the energy stocks, because VST went absolutely crazy yesterday. VST was up another 5% or something. We talked about this one being one that if it pulled back 5%, I'd buy it. I don't like the valuation. And it kills me. I didn't buy it here on October 11th. It did pull back 5%. I didn't abide by my rule. And I wish I would have. That's a 20% pullback right there. I wish I would have bought it down here at 110. I think the low right here is 114. So I wish I would have bought it here at 114, 115, even 120. It's at 138 today. Okay. Is that the all-time high? Well, let's go look at VST. This is how you use Seeking Alpha Premium. Okay. All the tools are out there for you to use. The valuation for me is a bit much. I put it in the newsletter. Again, the newsletter is free. There's no reason for you not to sign up for this. It's free. Yes, I give paid newsletter subscribers a little bit of benefit, but it is free every day. So VST, I put it in the weekend newsletter. There is one that I like better based on the valuation. And that's the one that I've got on my watch list. Am I going to buy it if it pulls back 5%? This isn't necessarily in my wheelhouse, so it feels super uncomfortable. But if I buy it, I'll put it into Savvy Trader in the trading portfolio. I'll make you guys aware of when I buy it. You know, one other one that went nuts? OKLO. You know which one I brought up a couple of days ago? OKLO. This was up 41% yesterday. 41%. Am I getting into this? No. The valuation to me, this one is a trade. And I wish I had traded this one. But NuScale Power hits all-time highs. Again, NuScale Power hit all-time highs on Amazon's plan to go nuclear. And they bring up OKLO. They bring up NuScale Power. They bring up Vistra. They bring up Constellation Energy, Dominion Energy. There's a bunch of names down here that they bring up that you can do research on. Okay? Simple stuff. Because it is. You know, somebody asked me about the picks and shovels. It's energy. The AI stuff, it's energy. And energy is one of those sectors that is beaten down. Just buy the XLE. You know, some of these companies are in the XLE. Buy the XLE. You're going to need energy for AI to take off. So I think that one's a good one. Now, for anybody that is a Inverse Kramer fan, he dissed Clover last night. And I will quote, he said, stay away from it because he doesn't want to see investors get hurt. Clover's a top quant pick right here. And if we go over it, I don't know why he doesn't want people to get hurt. Now, if you go to Wall Street, their average price target is $3. It's trading at $4.26. The quant says it's a strong buy. It's had it as a strong buy ever since, let's see, this is $2, 8.13. So if you were watching this one, you said at $2, hey, the quant says it's a strong buy. You've doubled your money. You've doubled your money. It's ranked number 1 out of 10 out of healthcare. Now, what you have to know is UNH just said healthcare costs were killing them. MOH, which is an alpha pick, just said healthcare costs are killing. They're down a lot. Clover, not down. And I don't know why. Maybe it's the short interest. Short interest is 6.25%. But again, Clover interest for everybody out there. So another sector that has been going nuts, DPST. DPST in the 4-hour algorithm, this got you in on October 8th at $95, okay? $95. You're at 116 right now. When we look at a weekly chart of this, we're not even up to the 200-day. And if you look at this for the long term, right before the 2020 COVID, it dipped down. These are regional banks. These are 3 times levered regional bank. It came back. Then you had the banking crisis. Now, the distance between this and the 200-day, I think you have opportunity. Again, am I playing this one? No. I think you should trade this. And how should you trade it? Well, maybe in the 60. Let's see how the 65-minute. I don't know. This could be worse. Nah. You make 8.3% over 8 months. But if you bought this 8 months ago, you made 65%. Are regional banks overpriced? I don't think so. Now, what you have to worry about is the crap in the regional banks. I own IWM. And I have IWM because, hey, small and mid caps, they're just underperforming. So, if you want to trade, have you seen the psychedelics lately? This stock drug, DRUG, and here's a good list of all of the psychedelic names that you can trade because they have gone absolutely nuts. Now, yesterday pulled back. But if you look at 1 month, it's up 2,222%. That's crazy. Okay, over 1 month, 5 days, you're up 2,500. And that includes a 25% pullback yesterday, by the way. Now, the quant doesn't cover this. The market cap is 127 million. So it's not something that you're going to, oh my God, you look at the financials. What do they have? $1.1 million. They have no revenues, but they have $2.5 million in actually. It's a company that has no revenues and they're losing $2.5 million just in operating income. Okay. That's the problem. They're not making money. This is an absolute trade. Nothing more than a trade. But again, if you want to trade it, you can get the charts in Trendspider and trade it. And if you want to know all of the psychedelic drugs, that drug makers that are out there and you want to trade these, here's the article for you. It'll be in the newsletter for free. So the link will be there. Just take a look at it. Now, let's talk about DJT. I don't have an article for this, but I do have the stock chart because we just talked about a company that had $125 million, market cap. I forget what drug was. Let's see. Drug is a $127 million market cap. Now, DJT, because this one is up like 40%. Let's see. 1 month, you're up to 76%. 6 months, you're up 36%. 5 days, you're up 20%. This one has been going nuts. Now, everybody in Seeking Alpha says sell it. And the reason they sell it, here's what you have to know. They make, we'll go over to the financials. So I'm not making this up. Trailing 12 months revenue, 3.4 million. Okay. December 2023, last year, it was 4.1 million. So they're basically bringing in $4 million. I can tell you there are Waffle House locations bringing in more revenue than that. What do they spend? $125 million. Okay? $125 million. Earnings from continuing operations, they're losing $379 million. This is their balance sheet. That's what they're doing. Now, if you go back and you look at the market cap, remember, they are losing $400 million. Their market cap is $6 billion. This is a company that just launched a streaming service that charges people for movies that are currently free on other platforms like Pluto and other free streaming apps. There literally is no business model to this stock. The only reason they are investing in this one is because Trump will become president. And as his odds go up that he will become president, this stock is doing. Now, I don't blame anybody for buying this. If you're a Trump fan, go and buy it. Hold on to it because that's what's causing this to go up. There's a 5.87% short interest in this. So it's a little heightened, not huge. Nobody wants to short this. At its peak, this was a $79 stock. $79.38. And it's trading right now at 31. Do I think it's going back to 79? I don't know. But again, if you want to invest and trade in this one, just realize this. If you invest and you think, I'm going to hold this because he's going to become president and it's going to become a great business, it's not a business. There is no business model whatsoever. None. Trump has said he won't sell his shares, which is great. Because when you hold them, and again, his fans are holding these shares. That's what's causing this to go up. The second they dilute and they want to grift and they want to launch another coin or something like that, and they say, hey, we've only got, few million shares out there. We're going to issue another 4 million shares. Yeah, that's like Trump University diplomas. They're pretty worthless. So again, trade this one. Just be careful. Don't get sucked into the FOMO. Let's talk about QQQ, because this is an ETF that actually makes money, that has good companies with good products, with good management and good earnings. Okay. QQQ, top 100 NASDAQ companies. This particular analyst, Sensor Unlimited, says time to take some profits. Now, they've said, what I want to point out is they've said this before. They had it as a holdback here on October 27th of last year. That's about a year ago. They've missed out on 42.17. Okay, 42.17%. They said it's a hold in April. They missed out on 11.7. They said it was a buy here on August 21st. They're up 1.74. The S&P's up 3.94. So maybe they're right, but they're saying it's time to take profits. Don't let the kind of noise hit you. Okay, I think this one's a good one long term. Just look for an entry. Look for an entry. Again, the 4-hour algorithm provides you entries in this. The 4-hour algorithm, if you wanted to trade this over 24 months, it makes you 72%. Okay? Don't listen to somebody. Look at the charts. Make sure you know your fundamentals. Understand when you're getting in. The 4-hour algorithm just leads you in there. Okay? Now, Uber. Let's talk about Meta. First, Meta. Meta's laying off employees at WhatsApp, Instagram report. Make no mistake, this is AI. This is getting the work of one person that used to be 10 people. These are developers. These are people that Meta doesn't need anymore. They're trimming the workforce, and they're going with AI. And trimming the workforce is great, but make no mistake, this is also about bolstering up that AI capability at Meta so that they can write more code, they can do more things, and they can do it with less people. It's also about spending money with NVIDIA. So he's basically taking payroll off the balance sheet and buying more chips. That's what you're going to see. It's going to be huge. Because we'll go over it in a little bit. Taiwan Semi said they can't make enough chips for their. They can't make enough. They literally said they can't make enough. Now, another core portfolio name, Uber. This is, remember, Dasha Kashikari, I think that's how you say his name. He was the former Expedia CEO. So, this is about Uber creating that super travel app. This is about Uber creating that major app that the rest of the world, each country has their super app. The United States doesn't have a super app. Uber wants to become that super app. And so, again, when you look at this core portfolio in Savvy Trader, and if you want to follow it, it's on Linktree. It's free to follow it. These are names that if you want to compare them against SPY, we talked about how Alpha Picks. If you don't want to buy Alpha Picks, use this portfolio. I wouldn't use the 100 shares per name. I wouldn't, break it down that I'm going to buy 1 share per name or something. I would tailor it to what your risk tolerance is. If, for instance, you say, hey, Lilly at 916, I don't like it at 916 because the valuation is too high, go and buy the XLV, which is the healthcare ETF. That has Lilly in it. Go and find an ETF with Lilly in it. You don't like Costco at 887 because it trades 50 times earnings. Go and find an ETF. I think it's XLP, Consumer Staples, something like that. Meta, XLK. You could, again, buy what your risk tolerance is. But if you can't afford alpha picks and you want to build a portfolio, this is it. And when I go over this, yes, I'm talking my book. Uber, I have in my own portfolio. Expedia jumped 7%. I don't have Expedia. I probably should. Uber's down 2%. Uber is an $80 stock until their earnings come out. Until their earnings come out. And I think probably pushes up. Because what we're seeing is the consumer spend. You're seeing these travel apps. Look at United Airlines was up like 11, 20% yesterday. It was up huge. Uber, you're seeing it blew right through that resistance line. And now it might be using it as support. It's down at 79. It pulled right back there. Right outside of its Bollinger Bands. Bollinger Bands pulled back. MACD, super high, crossing down. RSI, too high. Right before their earnings. They're going to make money. I think it'll be fine. If it pulls back to 70, buy it because it'll go back to 80. Good company, good product, good profits, good management. And don't forget, we just brought up Lilly. Don't forget about GLP-1s. Lilly, Gilead, Amgen started at outperform at Bernstein. Okay, Lilly's up 1% in pre-market. You can buy these. Again, look at the news and then look at the chart and look at the multiples. Look at everything that you can about a stock. And if you don't know enough about a stock or it doesn't feel comfortable, go and buy the ETF. We're in a bull market until we're not. And so I do think that we start to see some volatility around an election that most likely won't be confirmed on November 4th. And even if it is confirmed, there could be contentious, words. We could have another January 6th come out with allegations because that's what's been set up. But again, you want to be in this market. Even if there is some volatility, you want to be in this market. Now let's talk about earnings because everything's, this is up 8%. Taiwan Semi source as AI demand boosts outlook, will not buy Intel Foundry. So they said they're not going to buy the Intel Foundry, which puts, again, Intel in a tough position because if they sell the foundry business, who the hell's buying that? Taiwan Semi doesn't want it. Taiwan Semi is the largest foundry business in the world right now. And most of it is in Taiwan. So if China, blockades Taiwan, we're screwed. The world is screwed. You'll see everything pull back 30%. But until then, make some money. This is up 8% in pre-market. It took everything. And here's what I want to quote from the Taiwan Semi conference call. Okay? The CEO just said, our customers' demand for exceeds our ability to supply. And that customer is NVIDIA. And so when we look at NVIDIA, remember how I said NVIDIA buying at 130 was a good one? Well, in pre-market, we're at 140. Now, when you look at Wall Street, what do they think? It's a $150 stock. That's still 10% from where you closed yesterday. It's still high. If you don't have exposure to NVIDIA, get exposure to NVIDIA. Okay, this is one that I've been pounding the table. I wanted to buy it on that dip on Tuesday, and I didn't get to it. I didn't buy it. I should have bought it. I think I was pennies away or something like that. It didn't hit the 130 price point. We can see what it hit that day. This day where it got pulled down, it hit 128. I guess I put it in right after it was, but it hit 128. That was a great buy. At 128, you're at 139 right now. That's a great buy. Market just opened up. We use this 120 we haven't used it as support 122. But, it's clear that was a good buy. At between 100 and 120 was a good buy. And I continue to say it. Now, Dan Ives, he says TMC monster numbers and guidance, very important data point for AI revolution thesis and growth looking ahead. As we said, ASML is background noise. TSMC is what really matters for tech and the AI trade. And yes, ASML, it's not AI chips. And even ASML said the AI portion of their business was very strong. So now we know AI is continuing. So what do we have today on earnings? We have Netflix. Netflix earnings after the bell. I may go live. Look for, if you have the Substack app. If you don't have the Substack app, just go and Google, go to Google Play Store or Apple Store and get the Substack app. I may go live at 4 o'clock to kind of talk about Netflix earnings. There's two things you're looking for: subscriber addition and ad tier growth. That's it. And again, if they say they're cracking down on passwords still and they still have room to go, this is an $800 stock. You know, buy it if it goes under 700. But if you subscribe to Netflix and it's at 702, just buy it at 702. $2 a share. Buy a couple shares of it or get an ETF that's exposed to it. The valuation is crazy. But the PEG ratio is under 2, 1.39. Their growth, revenue, 13% year over year. Levered free cash flow, 12% year over year. This is the only streaming service that's making money. That's it. So social request, Jack Walsh, he invested from Spotify. OKLO up to 1630 right now. Gap filled, solid sold half. Suck it, Ryan. Have a good one, Gary. OKLO was just a killer. Let's see where it is in pre-market. I think it's up a little bit. Or actually, let's see, OKLO. I put in an A. Why did I put in an A? OKLO here. OKLO is at Let's see. Let's look at the OKLO. OKLO is at Why is it still put in pre-market? Oh, come on, Trendspider. Trendspider likes to hold up on me for some reason as I get towards the end of this podcast. I think it's my computer with resources, but we'll look at the 4-hour. NVIDIA is just soaring at 138. OKLO. This is nuclear. Let's see. OKLO is at 1478. It is 1484, down 10%. Do I think that this one's a great buy? I'd be a little bit scared of it. Wall Street says it's $10 stock. The valuation's B. I mean, they're not making money. That's the problem. So I would trade this one. Kudos to Jack for making money. Kudos to everybody else for making money. Congratulations. Now let's talk about scans. These are stocks or ETFs that show bullishness in my 4-hour algorithm. Now, XLY. This is consumer discretionary. This is what I invest in rather than owning Tesla. I own XLY. I just look for entries in XLY. You guys will remember, I think it was back here. I sold it like 190 or something like that. It's at 199 right now. If you look at a weekly chart of this one, the all-time highs back here in November, it's up above 200. So when you're trading at 199, you probably still have some to go. The Golden Cross happened here January 1st, and we've continued higher with a major pullback here in July, which hit the 200-day, used that as support. That was the buy at the 200-day. August 5th was the buy at the 200-day. If you bought at the 200-day, you bought at 166. You're at 199. What, a month and a half later, 2 months later? That's a good buy right there. But in the 4-hour, it does have another buy at 198. So you win. If you traded this one over 24 months, you had 26 positions. So it's about once a month. You have a win rate of 44%. Your average win is 6%. Your average loss is 1.68. You make 53% trading those 26 positions. If you bought and held, you made 42. Okay. Energy. We talked about energy. One of the energy names that I have, it's an oil name, is NFLX. The reason I have NFLX is because they put off about 7-8% dividend. Now, I don't look to add to this one. I'm just kind of giving you, hey, if you trade this one and you want to trade it around the 4-hour algorithm, you make 11%. If you just bought and held this 24 months ago, you made 47%. Now, here's the key. You made 47% plus 8% dividend per year. So add another 16, 17% on that 47%. That's what you've made. NFLX, cross up in the algorithm. Google, we talked about this one. This one has an entry in the algorithm at 166. I don't know that you want to buy. I do think that 171 is a resistance level. I do think that this one is susceptible to the search revenue of all of this one. And you know, I tried making images in Gemini. They have now restricted your image creation of people to only Gemini 3. So I'm using it less. I'm a little bit suspect that they're kind of not, I mean, they're trying to monetize as much as they can. You do have to buy Google One or something like that. You do get extra space. You get a bunch of different things. I don't like it. I don't like having to pay for stuff like that where I can get it for free. So, Verizon 43. Buy at 43.86, 43.91. That's where you're trading. You make the same if you trade, whether you trade or buy and hold on this one. Is this one a good buy? I don't know. I mean, that 200-day still moving negative, but that 50-day moving positive. And Verizon, it's not an overly like crazy thought that this is the valuation, not bad. PE's 9. Sector median's 13. It's just this is like space. It's an expensive business to be in. And it's a race to the bottom. They have to subsidize the phones. They have to lower their prices. They have to compete against AT&T and others, T-Mobile. So this is a tough one, but it's in there. There's a bunch of others. One that I want to point out that has an entry is URAX. We talked about uranium stocks. This is a double leveraged ETF on uranium. Okay. The initial buy-in here was at 1174. Now it's only been in existence for 4 months. We talked about triple leveraged ETFs over the weekend in the newsletter. I did a little podcast about it. If you want to see it, it's on. It's right here. It is one of the recent posts. You can go see it on here, but it is one. We talked about how these things come out. This is double levered against uranium. Now the algorithm again makes you it makes you 33%. You had 3 trades in 4 months. Okay? 3 trades in 4 months. Your average win 55%. You're still heading up there. It has another MACD cross up. RSI is a little high, but if uranium and nuclear are going to still go nuclear, this one will run. If you have any questions, hit me up. Everything's here on the link tree, linktr.ee/daily stock pick. I didn't do a full ad. This is just about how to set up a portfolio. And I think that's the main focus of this podcast was, hey, there's a lot of opportunities out there to set up your own portfolio. Just make sure you're doing it in a smart way. You can pick stocks from the Daily Stock Pick Core portfolio. You can see how it performs against the S&P. You can do it by buying alpha picks and getting a specific set of data-driven stocks every month. And they tell you when to sell. And it covers multiple sectors. Again, you get access to the full portfolio with the percentage of what each stock is in the portfolio. And you can build your portfolio like that. You can, try and trade DJT. You can try and trade the psychedelic stocks. You can trade the tech stocks. You can buy XLK. You can buy XLY. So this wasn't just about ads. If you're thinking that this was just a whole podcast about ads, you're not listening. So work on your listening skills. This was a complete podcast about your portfolio, where we're at in the bull cycle, what risk tolerance you want to take, and how you go about it. That's how you set up your system. And that's how you set up your process. Make sure you're doing that. Make sure you know where on the charts. For Apple, Apple's the main portion of my portfolio. I am well aware that Apple is $230. I sold about $20,000 worth of Apple yesterday. The reason is because I want this 228 and 230 to turn into support. I'm willing to take that $15,000 off the table and then buy it at a lower price. This is in my retirement portfolio. It's not in my brokerage account because I don't want a tax event, but I'm willing to do that because I know exactly where Apple is. And not necessarily on the chart, but then I go over and I use Seeking Alpha and I say, okay, what's the multiple of Apple? They're trading at 34 times forward earnings. Now, they're going to print cash. They're going to get, do another record buyback of cash. They're going to announce that the iPhone 16 is selling. They're going to announce that the AI stuff is coming out there in March and that they see future growth of the iPhone. They're not going to give specifics, but they better have revenue growth continue. If you see revenue growth go down, this is a $200 stock. And you know what? My sale at $230, I'll just buy it back at $200 in my retirement account. So again, make sure you're setting up your portfolio with thought process like that. And if you don't want to go through those processes, again, alpha picks. That's why I'm such a strong believer in alpha picks. And yes, I was a subscriber before I became an affiliate. So if you have any questions, hit me up. I'll talk to you guys later. Bye.
Every morning I wake up to the sound of of the trading bell, my heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.